You're watching the India development debate on a day that has seen big global news coming in. In just a bit from now, we can expect the phase one of the US-China deal. It's a day that could end a nearly 2-year trade war between the US and China that has impacted both these economies and the world. So why should we care? Well, because this fight between two of the world's biggest economies has seen tremors globally. India has been impacted as well. Will it all end today? We're going to be talking about that on the show, first up on the India development debate. But remember, a lot is happening as well today. Vladimir Putin seems to have sacked the entire government. The Russian Prime Minister has stepped down as Putin plans newer rules that will reduce his successor's powers as well. Up ahead in the show, we talk about climate change and whether Indian businesses are ready. But let's first focus on US and China. Here's what we know so far, that it's an 86-page deal. In phase one, that will be signed today by US President Donald Trump and Chinese Vice Premier Liu He. The Americans claim it includes China's promise to buy American goods worth $200 billion over the next 2 years. It's not clear what China gets in return yet. So will the US drop tariffs, reduce tariffs? We don't know that yet. Also, will the concerns over US technology being taken illegally by Chinese companies, at least that was the claim, will those be addressed? To take us through this big global story that world markets are watching, I'm joined now by Seth R. Freeman, a Senior Managing Director at Glass Ratner Advisory and Capital Group, Professor Shrikant Kondapalli, Professor in Chinese Studies at the Center for East Asian Studies School at JNU, and Jayant Dasgupta, former ambassador and former permanent representative of India to the WTO. Welcome to all of you, and thank you for speaking with us today. Seth, what do you think is going to be in that deal?
Well, actually, they're doing a good job intentionally keeping the deal secret so far, and it's not going to be revealed until after it's signed. The one issue is that trade negotiator Peter Navarro has stated that unlike many trade deals, this one will not have a lot of side letters. And what we see is what we're going to get.
All right. Mr. Dasgupta, why does it matter? Let's put this into perspective for our viewers, why this trade deal matters and why the world is looking at it. Let's bring the Indian perspective in as well.
The first thing that has to be remembered is that the US and China represent the two largest traders in the world. And because of the emergence of the global value chain, especially in the context of China, not a single country is there which is not part of the global value chain. I mean, all the important exporting countries are part of the global value chain. So if there is a trade tension between the US and China, everybody's trade suffers as a consequence. And of course, investment flows get slowed down, and the stock market gets jittery. And ever since the 13th of December, when the first news came out that the US and China were close to signing the phase one of the trade agreement, the stock markets have started looking up. Of course, it remains to be seen as to what China is getting out of this deal, apart from an assurance that the 15% tariffs which were to be imposed from the 15th of December on approximately $160 billion worth of Chinese imports into the US, that will not be put in place as of now. But the Chinese have made a lot of concessions, it appears, and they have made some promises. Primarily that they will be buying about $200 billion worth of goods and services over the next 2 years.
Right.
For instance, oil and gas, $50 billion. Agricultural goods, about $32 billion.
Yeah.
Manufactured goods, $80 billion. And services, about $35 billion. So those will have to be translated into reality. And one of the important things which has been apparently incorporated is a dispute resolution mechanism by which a 90-day period has been given for three a three-step process between the two sides. So the whole world is watching whether the Chinese stick to their promises and the Americans also act in a fair manner. But from the face of it, it appears that the Chinese haven't got much, apart from some assurance which may have been given off the table that their imports of high technology items, which may, for instance, affect Huawei in a very bad manner, adverse manner,
Right.
that is going to flow unhindered.
Professor Kondapalli, do you believe that the Chinese will actually settle for a poor deal? You know, I'm looking at the optics on it so far, and we'll know soon, in about an hour and a half, what the deal is really about. But so far, you've heard Trump and the Trump administration do a little bit of chest beating on it, talking about what a great deal they've got. You've not heard much from the Chinese. What do you read into that?
I think for the past 1.5 years, there has been a lot of depression in the Chinese economy, in the sense that this is linked to the GDP growth rates in China, which have fallen down according to the IMF. They expect the growth rates to be around 5.8%, as compared to the Chinese Premier Li Keqiang's estimate of 6.2% growth rate. So the US-China tariff conflict has resulted in an impact on the GDP growth rate in China. Number one, China itself was trying to wriggle out of the global financial crisis in 2008, and they have invested a lot in the infrastructure projects, and also on excess capacities build up, cement, steel, and so on. Now, while they have the Belt and Road Initiative to take care of some of these excess capacities, still the overall export-import component is important for the GDP of China, and that's where the US-China trade tariff-related issues have come to the fore in the last 1.5 years, because the Chinese exports, for instance, the Li Keqiang's estimate in the previous National People's Congress has been that the exports are rebounding, but very marginally as of now. So they are dependent on these, and over a period of a decade so far, China has been able to muster a lot of surpluses with the US, and that's the root of the conflict
Right.
between US
Yeah.
and China.
Yeah.
Yeah. So now, even if the Chinese are going to lose for a couple of years in terms of more imports from US or buying in the US market, still they have had so much of surpluses for the last decade. For example, they have had a trade of volume of about $580 billion a couple of years ago, with which they have nearly $350 billion of export to the US market. So they have built up surpluses over a period of time, and so they can sustain for some time in order to import from the US or to invest in the US market. So I do not think this is a big issue for the Chinese at
Okay.
the moment.
No, so,
The major issue is to maintain growth rates.
so that's an interesting perspective, and you know, I'd like to get views from across the panel on it. You're saying that the Chinese are going to sort of bite the bullet, let you know, the Trump administration claim that they have tamed the dragon because they've enjoyed surpluses over several decades, and they're really hurting. Seth, you agree with that? Because with the Chinese, they may even sign the deal, but you don't know what's really going to happen next.
No, we don't know what's going to happen next, but there are a few areas in which China does gain from this phase one agreement. And a very important political, domestic political, and global label has been China as a currency manipulator. And part of this phase one, it was just resolved earlier this week, I believe. And along with other Asian countries in Europe, China is not going to be labeled a currency manipulator, and that's very important for the national pride. That's one thing that China is getting. Now, Here, it's being promoted. The deal is being promoted as very beneficial to the farm sector, up to $50 billion. That is a substantial increase in farm purchases. However, two major components are soy and pork. And we know because of African swine fever, China has had to destroy an enormous amount of livestock. And so actually China needs to import this level of pork. So there are some subtle nuances that go beyond simply tariffs.
Perspective there. Mr. Dasgupta, I want to come back to the Indian perspective. Now, so far, and over the last 2 years, actually, I've been talking about this, that how does this impact India? How does this impact India? The narrative was that, this is a gain for us as imports from China reduce. From the United States and across the world, India has a huge opportunity to ramp up imports in our direction. That didn't really happen, let's be honest. And that window now seems to be closing. So have we been left sort of sitting on the sidelines?
I think one of the projections that had been made was that large multinational corporations would be looking at alternative investment destinations, and they would be trying to hedge their risks by not just focusing on China as a manufacturing base. And India would come up if it had got its act together as a very viable alternative. But unfortunately, we still have some distance to go in this regard, and we have not made a lot of changes to our domestic sector reforms. So I think we have not been really able to attract investments the way we wanted to, or we had thought we would be able to if we had carried out a lot of reforms. So that is an unfulfilled promise. And if things go back to the normal state of affairs between the US and China, of which, of course, there is a possibility, but I wouldn't say that it is a very strong possibility, because these trade tensions will continue to simmer. So that is a problem which will be on the cards for some time. And, we have to get our own act together, and we have to reform, we have to make ourselves an attractive destination.
Yeah.
So that is the kind of thing which we will need to do.
Professor Srikanth,
benefit from this.
Professor Srikanth,
US-China trade tensions.
Let me get you to weigh in on the Indian perspective as well. That window was there. That window was there for about 22 months for India. We saw a lot of nations actually taking advantage of it. Countries like Vietnam, countries like Bangladesh did actually gain from the fight between US and China. Did India lose an opportunity here, assuming that a deal gets signed and all is well and this trade war actually starts ending? What do you think about India's role in the whole affair?
I think we still have to wait and watch because there is the Treasury Secretary saying that tariffs could be reimposed even in the second phase. He mentioned 2A, 2B, 2C kind of phases. So it is still uncertain whether the phase 1 will be formed up or not in terms of the tariff rollback. We'll have to see the fine print and if the two parties agree to this, number one. Number two, in terms of Indian preparation, there are the news items coming up that 200 US companies, big companies, have been shifting base from China to Vietnam, Indonesia, and towards India as well. Japanese companies or European companies also, taking the signal from the US-China tariff wars. Moving on to the Indian side. So we'll have to see whether it is a short-term or a medium to long-term impact on India. In terms of India-China tariffs or trade, we have seen yesterday the Chinese customs giving out data that the trade deficit between India and China still is almost intact despite the slight increase in exports from India to China. So it remains, the total trade remains at around $92 billion.
Right.
They have not yet met the target imposed in 2005, about the $100 billion trade between the two.
Right.
But what is important is cumulatively in the last one decade, India's trade deficit with China amounted to more than $760 billion. So while Wuhan meeting and Chennai Connect did had some institutional arrangement to reduce the tariff, to reduce the trade deficit, but this has not been very spectacular so far, despite
Yeah.
2 years
No,
from
so-
the Wuhan meeting. So we'll have to see again whether the Indian side increases the heat on China.
So good question that comes to mind, Professor Shrikant, from the points you've made is does this trade deal sort of set a template for the rest of the world? Because the US issue with the massive trade deficit with China is not just the US's alone. The American concerns over intellectual property, etc., is not just the American concern, or even currency, manipulation, etc. Let me get Seth actually to weigh in on this first, and I'll take it round the panel. Do you think this could possibly set a template for the rest of the world to come in and ask for similar deals? Not everyone will have the same heft as the United States. And if so, why would China open itself up to a situation like that?
Certainly, intellectual property protections and the issue of technology transfer as a requirement to enter certain industries or to enter into deals with state-owned enterprises is something that would be of interest to any country. Now, the U.S. still has a significant manufacturing base, but in relative terms, we're a much bigger consumer economy. Other countries like Germany, for example, still have a very significant domestic manufacturing base. So their concerns would be a little bit different. They're much more, obviously they want to export things to China. It's important to remember that many large international companies have already established units and manufacturing plants and employ people in China. So trade is really one issue. It gets a lot of political headlines. But so some large companies actually do have quite a bit of protection in the sense they're already doing business domestically on a large scale in China. So we have to look at the broader picture. But
Yeah.
your point is that this could be a template for negotiations, particularly in dispute resolution, which is a major aspect.
Which is why this is going to be such a big deal. Phase one of it. Let's see what comes out in phase one, and then do we get to phase two? A lot of talk so far, a lot of claims by both sides. We'll wait and see what happens. Watch this space. I want to thank all of you for joining us in the first debate this evening on the India development debate. I'm taking a very short break, but when I come back, it's a topic that we at ET Now believe needs to be discussed and talked about. The world is talking about the impact of climate change. Top businesses are talking about the impact of climate change on their bottom line. But is it just talk? What are they doing about it? Are Indian businesses even aware or even ready for what's coming next? Is it all about profits or is it about business with a conscience? All of those very important questions being addressed after this break. Do come back.